You're listening to Business Stories with Ryan Arcaracci, where I speak to business professionals from all walks of life. Thanks for listening, and let's get to it. All right, welcome back to the Business Stories podcast. Today, I am talking to AJ Hazzi with Vantage Real Estate. He's based out in California. He's got quite the story. Started out in the boxing world. He got into real estate, which is, you're still taking hits. It's just a different way, right? So, AJ, tell us about your background, your story. I'm excited to hear about how you got where you are today.
Right on. Well, thanks for having me, Ryan. Appreciate it. Excited to be on the show and bring as much value as I can to the listeners. One little correction, though. We are, although we like to think we're in California, we're in Kelowna. But sometimes we call ourselves Kelowna-fornia, so it's not far off. We're kind of the Napa to the north up here in Canada.
Right.
Yes, sir.
Sorry about that.
No worries. So yeah, I mean, the real estate industry has been very, very good to me. It's essentially all I've ever known because I got into it very young. I was 19 years old when I stumbled into it. And yeah, I bought a house at age 19. And in going through that process, I met a realtor who was very impressive. He was 23, 24 years old, very good looking, GQ looking guy, wearing the pea coat, driving the Beamer, the whole bit. Had a very upward view of him. And he glamorized the industry for me, made it seem like one glamorous meeting from Starbucks to the lunch meals and the whole bit, and made it look really simple and really glamorous. And so I got my real estate license that year and got the the cold hard reality dished to me that this industry is certainly far from glamorous, particularly in the beginning. But I had a love for real estate. I love it as an investment class, and so I made my niche working the real estate investor angle very early on, and became well known as a guy who could find opportunity, who could negotiate, was not bashful to make lowball offers, and was willing to put creative stuff together, whether it was vendor financing, agreements for sale, all kinds of really creative stuff. And so I started to attract a decent amount of business. And in 2007, things had really, really taken off. My net worth was really good. I was 25 years old, and I thought the thing that I needed the most, well, I needed two things. Number one, I needed an Aston Martin to drive around in to really let my just ego out on full display. And I also needed to have my own real estate brokerage. And so I got my wish. I got both of them. And then just as we opened up our doors in April of 2008, and for anybody over the age of 30 on this call, you'll know exactly what happened in 2008. The tap shut and things got very, very challenging to be a real estate agent. And so I now had all of the additional overhead of my new brokerage, all the new payroll that I had taken on, as well as my $2,700 a month lease for my Aston Martin. So I had to get good at this game very, very quickly if I wanted to survive. And what seemed at the time like a death sentence ended up being just the biggest blessing, because it forced me to build systems and master the game of marketing, master the game of influence, and master the game of attracting capital, and really, really get down to the fundamentals. And so, yeah, from then I hired a coach, and he introduced me to a new business model, which is pretty prolific now. It's the teamerage business model, which a lot of people are using, which is that super team where you are your own brokerage. And so we've been running that ever since 2012. And we've built the business up to doing about $1 million a month in commission income. I've got an awesome team of about 40 people, including admin, and we manage about 1,100 doors in our property management division. And I get now to work on some fun stuff. I do coaching, and I have a fund that I manage, some investor capital, as well as my own capital and some family money. And I get to play leader, coach, and cheerleader for everybody here at VantageWest in Kelowna.
So, on the cheerleader end, when you faced that challenge in 2008, what was going on in your head? I mean, how did you deal with the pressure of the market shift and decide, I need to do something now? Like, walk us through the mindset you had to create to help you bounce out of that.
Yeah, I can remember it pretty vividly. I was staring down the barrel of a completely empty pipeline, and I had really nobody in my database of just regular buyers and sellers that was interested in listing their house and having it sit on the market. Buyers were running for the hills. They couldn't get financing anyway if they wanted. And so I started just thinking to myself, well, what is going to be the thing that sustains me here? And what I quickly came to realize was that there were a lot of people who needed to move, and there were a lot of people who were totally in a logjam. So I thought, okay, what is a way that I can get through this? And I just remember sitting there trying to be creative, trying to be the person that makes chicken soup out of chicken shit. How do I turn this into an opportunity?
Yeah.
And the thing that came to my mind was trading. And I was fortunate that I sort of stumbled into this concept of trading because my dad was a bit of a wheeler dealer, not a real estate agent, but bought and sold things. And he pushed me to try and trade his property for another. And so I was having all kinds of conversations with other realtors and other homeowners that were trying to sell and trying to convince them to do this deal. And so I was refining my pitch, this idea of, you take my problem, I'll take your problem, let's get this thing moving.
Yeah.
I was refining that pitch as I went along. And over time, I got pretty decent at it. And then I started educating other realtors in our area. And I would go to other agents who were successful, who had large inventories of listings. And I would say, let's meet for breakfast and let's compare our listings. And I showed them the process that I followed. I looked for anybody that was a move-up buyer, anybody that was going to be taking on more real estate when their property sold. And I said, for every one of those that we have a potential double end in our hands. So let's focus on what that move-up buyer wants. Look through my inventory and see if any of this stuff would be appealing to them if my folks took your person's condo or townhome on trade. And we would put these deals together and we'd be creating double ends. And so you really only need to do one or two of those every single month to keep the lights on. And so that became the thing that saved our bacon. And with that bit of stability, then I was able to turn my focus onto, well, who else is buying right now? And it was all the foreclosure stuff. And so I made it my mission to get really educated on that stuff. And then I started taking what I learned and sharing it on YouTube. Some of my earlier YouTube videos were back in 2009 and 10, where I was explaining the foreclosure process to people. And so I started building authority in that space, and people would come to me and ask if I could handle their, if I could help them buy a foreclosure property. And these guys were all cash. And so now I'm picking off one or two of these deals every month.
Yeah.
And so that's really what saved our bacon. But you asked me about the mindset. At one point, it was just pure desperation. And I guess a little bit of dumb luck that I figured out that this whole trading thing could be a way for a lot of people to get unstuck. And so that's how we made it through there.
What I love about that is, AJ, is that you found a way to innovate through a real difficult situation. Do you think that is a quality people have to develop, not just in real estate, but in sales in general? And how do you navigate or train people to develop that process, if you can?
Yeah, that is essentially my role here still at the company, is to find ways to navigate hard times, to turn challenges into opportunities. I don't know that that's as teachable as some of the other skills that would make for a successful consultant or salesperson. That's usually to do with coachability, curiosity, a servant's heart, that integrity piece, those things, that's coachable and trainable. People who spot deals, I've always found that there are just people in life that tend to be consistently lucky when it comes to finding bargains or finding great deals or finding opportunity. It's because they've trained themselves to look for it. Now, I suppose to that point, you could train yourself to look for it, because every day when you wake up, you find what it is that you're looking for, right? It's like that old experiment where they sent somebody into Times Square and they asked them to walk around a few square blocks and look for loose change on the ground. And then they asked another person to walk around the same square blocks and look for insects or any other little animals that they saw.
Yeah.
And when they came back, they asked the person who was looking for change, how much change did you find? It was $47. How many animals did you see? 0. Flip side, the person looking for little animals and critters saw 20 different critters. How much change did you see? None. You find what you're looking for. Your brain only has the ability to scan and process information. And so if you're constantly looking for something, you will constantly see it. Yeah. And so I think that's really the skill that I've developed. And I think inherited a lot of that from my dad. He's an excellent deal hound. He was always bird dogging and finding great little opportunities in distress sale situations and people willing to be creative and all kinds of things, but he was looking for it.
When it comes to investing, if someone is not savvy with it, maybe they own a house, but they want to start. building an investment portfolio in real estate, but they're not sure what to do. They don't know if they have the money. There's also a fear factor, right? They're scared. What if I lose money? What if I can't afford it? What if it costs money to fix this place? Like I've been in that situation myself, right? Where I've really wanted to start investing in more. I have bought and sold real estate, but I want to get more into it. But I have a lot of fears in my head. I'm sure a lot of people do. So what's the advice you'd give to someone who's in that situation where they really want to get started? They can't buy 20 properties tomorrow, but they want to start to develop something. What's the advice for that?
Yeah, the whole analysis paralysis problem is what keeps most people sort of stuck in neutral, not really going anywhere. I think for me, maybe I was just, not quite intelligent enough to be fearful. So I just took action. But you just kind of got to get in. And before you make those decisions, there's really only a few little criteria that you need to be following just to safeguard yourself. Number one, don't buy things on speculation, especially as you're a new investor and you're just learning the game. There's a massive difference between speculating and investing. And speculating is betting purely that the property value is going to go up. That is often a great way to make some money, but you are effectively gambling. Real estate investing is not based on creating capital gains. It is based on cash flow and mortgage paydown. And if you are buying with very tight criteria based on how much rent the property would need to generate to cover the price you would pay, if you stay and adhere within that, it's really, really hard to get hurt in real estate. There's almost no scenario where you buy a positive cash flow property and hold it for any length of time and end up coming out the other side in a worse situation. Like that just doesn't happen. Now, the horror stories are the people who get hurt. Maybe they bought a money pit. So there's an alignment with a good professional or become just savvy enough on your own to know what to look for, but having a great home inspector, building out a great team, making sure that you can trust your agent to steer you away from the money pit, making sure you've got a great inspector that's going to uncover any issues and you're going to have those addressed. It's not to say you run from the home that needs work, but just make sure you've got enough relief in the price or have convinced the seller to, do the concessions required to cover those issues. But eyes wide open, you're never really going to get hurt by positive cash flow. That's the moral of the story. And so I would just say, you don't have to buy where you live. So if where you live doesn't create positive cash flow, say la vie, there's lots of markets where you can still get cash flow. And you can get that sort of 10 to 12% rule. If a property can generate, if the property's value should be between 10 times and 12 times its annual rent. So if it's generating $50,000 a year, the property should be between 500 and 600,000. If you can find that formula, you will be positive cash flow. And you really cannot get hurt at that point. That's the guardrails. And then it's not rocket science, right? You let the tenants pay off of your mortgage and you allow the market to do what it does, which is it always performs over time. It'll go up and it'll go down, but provided you're not in a negative cash flow situation, you're never forced to sell.
Can you elaborate on that, like your own personal key principles that guide your investment decisions? Because obviously you're at a higher level. We're talking people that are at the bottom level, but they want to get to where you're at. So, what other key principles would you say guide your decisions throughout the process, through buying and selling and everything like that?
So I look for things that I can add value to. So the one nice thing about real estate, well, there are many nice things. One of my favorite things about it is that we have an opportunity to influence its value. So I'm not looking necessarily for the properties that have had all of the cosmetic work done and that are absolutely turnkey. I'm looking for stuff where my favorite is when you've got like an elderly investor, seller, owner that's taken great care of the major systems, the roof, the windows, the boilers, everything's all done, except they've let the cosmetics slide. Cosmetics and those upgrades are some of the lowest hanging fruit where you can get, $2 to $3 for every dollar you put in. I like that opportunity to be able to go in and do what's called forced appreciation so that I'm creating more margin of safety in the property. I'm creating a bigger equity position in the property, which gets me to the place where I can re-advance some of that equity to myself much quicker. And that's that BRRRR strategy that a lot of you probably heard of, which is the buy, rehab, rent, refinance. And you can do that where you start to recycle some of your cash. And so what's nice about using a BRRRR strategy is you get to build up your assets much quicker because you don't have to save an entire 20 or 25% down payment over and over again in order to get into the next property. You're creating much of that value, re-advancing it tax-free, because when you take on additional debt, there's no tax consequence. So now you don't have to go and make that $100,000 at your job and pay taxes on it. You can take it tax-free out of the rental property that you've forced its appreciation. And now you take that money and then you go and plunk that down as your down payment on another property that is also cash flow positive, that also has some opportunity to force and increase its value. And when you start to look at, okay, my criteria are value add properties that are positive cash flow, that are in areas of stable or relatively decent growth. And then the last piece that I would add to it is always be mindful of where you are in the market cycle. Now, the market cycle is very predictable. You'll have a real estate boom, and following every boom is a slump, and following every slump is a recovery. Now, we don't know how long each boom, slump, and recovery will be, but we do know that each of them have a beginning, a middle, and an end. And there are actually little things that you can look for to help you figure out where you are in that cycle. And the nice thing about it is it's very predictable. It always goes in the same direction. It doesn't reverb backwards. So if you're in the beginning of a real estate recovery, you know that you have the middle and end to look forward to, the beginning, middle, and end of the real estate boom to grow through. And so you can safely buy into that tailwind. Simultaneously, the flip side of that is if you're buying towards the end of a boom, you know where you're about to go. So you, not to suggest that you wouldn't still be buying, but you would have to be buying mindful of where things are going. And so a lot of smart investors will wait until we get into the middle or end of the slump and start buying at the deepest discounts, knowing that the market will soon recover. And so that last little bit is really where the seasoned investor that's been through a market cycle or two starts to use timing as their, as their accelerator or amplifier. And, I tell clients there are no good or bad markets. There are only good or bad tactics. And so some of the tactics that work in challenging markets where homes aren't flying off the shelves are some of the best ways for real estate investors, particularly newer ones that are short on capital, to acquire property. Things like rent to own, agreements for sale. These types of deals require very little out-of-pocket capital, and you can get control of these beautiful assets while they're already discounted from their peak pricing, knowing that soon we'll go back into a recovery and have another boom before you necessarily need to even refinance them.
What are your thoughts on approaching, like you talked about deals out there? What are your thoughts on approaching for sale by owners as an investor? It seems like that would be a muddy situation in some cases. Is that something you have tried or tested or done in the past?
So when you say for sale by owner, you mean people who are already listed but have not hired a real estate agent.
Exactly.
Um,
Yeah.
my thinking on for sale by owner folks is that they tend to be some of the most frugal, the most challenging folks to work with. Now, they're a great place for real estate agents to find listings because we already know something about them, which is that they want to sell. We also know something else about them. They're so tight on their margins that they want to save the 3, 4, 5% that they're going to pay their realtor. And so this doesn't typically lend itself to someone who's going to leave any money on the table or who is in distress. I find off-market properties are the best opportunities. These are folks that aren't necessarily in the best condition. Maybe they've got challenging tenants. Maybe they've got some sort of distress scenario. Maybe they're pre-foreclosure, where an instant cash offer for them is the thing that they need. They can't go to market. They can't endure a number of showings, et cetera. They need someone to come in and give them the certainty, the convenience, and that sort of control of the timeline. That's what they need. In exchange, they're willing to give a fabulous price. And these properties usually fit my buy box of being able to add value and force appreciation because they're typically dealing with a bunch of deferred maintenance, and there's usually a lot of upside to the cosmetics. So I think off market is a great opportunity for people who are looking for deals. For sale by owners, however, I find them to be a little on the frugal side to get the kind of deal you'd be looking for.
Yeah. That was the case for me when I was working in real estate years ago. I saw that all the time. One thing I got to ask you too, AJ, is I see a lot of this going on where you get these companies that they send stuff in the mail like, I'll buy your house right now. I'll give you an offer right now. And it just screams shadiness to me. Like, I'm not sure I trust that. What is your thoughts and opinions on a lot of these companies coming in? I think Open Door is one. I'm not sure if there's others out there where you are in Canada, but I see it all the time where I am. What is your opinion on those types of situations? Are they safe? Are they reputable? Is it something to be concerned with?
Yeah, that's the whole cash offer, or what you're referring to, is called iBuying.
Yeah.
With iBuying, so in the United States, you have some major players. You've got Open Door, OfferPad, you had Zillow Offers, there's Zoomcasa, and a number of others. In Canada, there hasn't really been. There was a couple properly, they went out of business, and really it's just mom and pop players. I've got Cash Offer Canada, which is a limited partnership. That's the investment fund that I manage. And we do have an instant offer program, and we do communicate that message to the marketplace of being able to skip the hassle of selling your home and get an instant cash offer. And our buy box is usually anywhere from 80 to 85% of market value. And again, looking for stuff that would be cash flow positive, as well as where we can go in there and force some appreciation. Now, to your point about it seeming a little shady, there are a lot of people in this space who are purporting to offer people cash offers on their homes. But what they really are doing is they're tying up properties, because these are what's called wholesalers. They actually don't have any money of their own. They might have enough to put a deposit down, but they're typically going to try to tie the property up for a good chunk of time. And then they're going to hopefully be able to shop that to their network of other investors and pick up a small spread. There are throngs of trainers, coaches that are teaching people how to be wholesalers, and wholesalers do have their role in the ecosystem. But the ones that where you hear the horror stories of, people making these lowball offers and then not being able to complete and leaving people in the lurch, it's typically a wholesaler. Now, there are companies that will make their offer, and the reputation of that company, for us, for example, if we make an offer, we must close, because the last thing we could ever have happen is someone say these guys are full of BS. Yeah. So the ones they're institutional buyers, your Zoomcasas, your Open Doors, your OfferPads, they're always going to close because their reputation matters more than the margin on that property. It's the people, the interlopers in between that are wholesaling, that's where the challenge will be. And so you just have to figure out who you're dealing with. A lot of those handwritten notes that come in the mail, that's usually a wholesaler. The ones that are sort of taped to your door and it looks like it was handwritten, that's mass printed, that's a wholesaler. Those folks are not buying your home. They're merely trying to tie it up, hoping to get a great price that they can make a margin on by selling it to someone else.
I have another question to ask you because I was recently, a few weeks ago, I was at a party. I met a realtor. She was from the Philippines, actually, and she was talking to me about buying international property. And I thought, and the prices were remarkably affordable. It was like $900 to get in, and then you're paying like $400 a month. And the property or the penthouse suite is not even built. These are pre-built units. So I'm asking family and friends and everything, like, does this seem, legitimate? Is it safe? What do you know, or what do you think about investing, outside of the US?
Yeah, that's a tough one to answer. I mean, there are no shortage of horror stories from people who invested in properties in, tropical third world places. And, what I've found is that oftentimes with these folks, they don't have traditional bank financing to do their developments. And so if you're buying something in pre-sales, whether it be in Mexico, Costa Rica, most times you have to make these fairly large tranches of payments along the way. So the small number that you're referring to, that, put $1,000 down, is like the reservation amount. But once that contract starts to roll, they're going to use your money to build it. And there's really no guarantees that it gets built in the end. And that's where the horror stories are, is where they've financed it up to maybe 70 or 80% completion on buyers' money. Maybe they don't reach enough sales to actually cover the end, and the project never gets finished. And then it goes into receivership and gets, your contracts are canceled and somebody else takes it over the goal line, leaving that initial investor up shit creek without a paddle. So not to suggest that that's the case often, but it does happen. And so that's where making sure you do your due diligence on the company that's doing the pre-sales, make sure they have a great reputation, make sure they've been around, make sure they have other projects, make sure that the sales team has, a good amount of history and confidence that they can provide you in terms of the package on the builder, you have to be very, very careful. There are some deals to be had. I believe in buying stuff where it's fully regulated. So, in North America, I know that there's no market I could buy in where I don't have 3 layers of regulation. The realtors I work with are regulated, the builders that we work with are regulated, and everything's regulated at the both federal, state, and provincial level, as well as the municipal level. So, like, there's just so much regulation to protect the consumer that it's very hard to find yourself in a situation where you've been ripped off.
So if you don't, well, I guess you have to research that regulation if you're going to buy in, let's say, Philippines or Mexico or somewhere like that. Your advice would be ask, what are the regulations in place? What's protecting me in this situation? Pretty much, that would be your advice, right?
Often case you'll find that it's the wild, wild west. I know Mexico is certainly that way. There are great deals to be had, and there's many people that I know that have done extremely well, but I know just as many that have had, horror stories. So
Right, right.
if it's the wild west there, if it's not highly regulated, that if you know how to operate in those spaces, there can be lots of opportunity. But for the average person, it could be more risk than it's worth.
Right. I want to ask you too. I mean, you have this boxing background. You said you boxed when you were younger, and I feel like there's some lessons to be learned in the boxing ring and the business world. Because I feel like in both situations you face stress and you face fear and anxiety. Can you talk about your life in that role? Some stories you've had where maybe you've just really had to overcome some challenges there. Um, but I think, having that mentality is important. And I think it really transmits to business too. So, could you walk us through maybe some stories from that and what you learned through being in the ring?
Yeah, you bet. I love Mike Tyson's quote, everybody's got a plan until you get punched in the face.
Right.
Right. And I really think that you learn a lot about yourself, putting yourself in these high stress situations on purpose
Right.
so that you're ready for the battlefield of real life. And so boxing for me was not just a great workout, it was a great sport. I enjoyed the camaraderie, I enjoyed just everything about it, but also did I know I was training and conditioning myself to have a very, very high level of resiliency and a very calm nature when I was always the lighthouse in a storm for my team because it's not the most stressful thing you can put yourself in. In a ring, standing across from somebody whose sole objective is to take your head off, that is a stressful situation.
Right.
Dealing with, increasing interest rates, we can usually find a way to counterpunch with that. And so it's a little less extreme when you put yourself in extreme situations. So I think, whether it's jumping in the cold plunge in the morning, whether it is hiking in inclement weather, whatever you need to do to get out of your comfort, I think putting yourself, your kids in places of discomfort, that's what builds the character. That's what builds that resiliency. That's what's going to create that calm in the storm. And that served me really, really well. I know that I can think of a couple of times, and I was thankful that I was still competing in both at the time, but I had a situation where in 2007, there was multiple offers on one of my listings. And this was during the time where I was selling almost 100 homes a year, and I had a really, really good assistant at the time, and I was beginning to rely quite heavily on her. She knew the business. She'd been with me for a couple of years, and this is not in any way an indictment on the work she did, but it was a situation where we had an offer come in and another offer. The second offer knew they were in backup position, but there was no language in the contract that said that they were in backup, even though we had conversations over the phone and everybody knew the lay of the land. The contracts suggested that two parties both had the right to buy, which created a situation where there was a bit of a legal battle over it.
Yep.
And I had to do what I had to do to keep my clients happy, was paying their mortgage and was doing everything I could to make sure they weren't in any kind of financial hardship. But as it turned out, the only way my clients could see at the time to get some resolution to this situation that had dragged out for a few months was to go to the media and tell them about what Remax had done. This was when I was a Remax agent. Yeah. But they took my sign down and didn't say my name to the media. And so the article ran and actually was on the TV that the local Remax had sold a house twice, and it was not painting the company in a very good light.
Right.
So, needless to say, there was a little bit of a mutiny there, and they went to the managing broker and told them they got to get rid of me. He came to me and said, "Listen, I don't know what to tell you. A lot of heat on you right now. You got to go." I said, "Can you give me 30 days to get organized?" And at that time, there was no other brokerage that would have taken me. I was essentially nuclear.
Yeah.
Fortunately, I had always had the plan to create my own brokerage, and so we did it. And in 30 days, facing the fact that all of my listings, like I had about 25 listings, they would all be delisted at that time. My website would have to come down. Like if I didn't have a brokerage to hang my license at by the end of this 30 days, I was dead. So I now had the mission of convincing, I didn't have the money at the time. So I had to convince a friend of mine who was at number 2 in Canada at BMW to come be my partner. He and I had sort of joked about it while we were in Vegas. I now had to go and convince him. I had to find somebody with the managing broker's license, the higher level of licensing, to be our managing broker and managing partner. So I had to go and find somebody out there who had that level of licensing, convince them to do it. I had to find space, create branding, do all the legal paperwork. Don't forget, I'm a 25-year-old kid at this point, and I'm facing a shot clock that if I don't have this all in place and a new brokerage that's up and running with a location within the 30 days, then I'm effectively out of business. And we were able to do it like right down to the wire. And I remember from that time, people were like, "How are you dealing with this, man? Like, how are you building a brokerage out of scratch in 30 days?" And to me, at that time, it was a game. It was for me, I had gamified it. Sure, there was a little bit of tension, a little bit of stress, but I was quite calm through that whole process. And I think because I was competitively fighting at the time, that was a big part of how I was able to stay as calm as I was.
That's that's crazy. I mean, that's really impressive. I mean, what what were
And
you
that
doing at
story culminates with us having a grand opening with like 400 people at this iconic building in our city. And we launched our brokerage with literally like a day to spare. We tried 3 different names. We couldn't get the different names. It's sort of tying the whole story full circle. Well, people ask me often, like, why do you call your company Vantage? It is because I had tried 3 other names at the time. And I tried to get Marquee Realty, Action Realty, all terrible names that a 25-year-old would come up with. Anyways, it wasn't until I'd been rejected twice and we had our space, we had our location, and a good friend of mine came to the location and he just came to check out what I had going on. And he goes, "Oh, so what are we naming it?" And I'm like, "You wouldn't believe this. I don't have a name yet." And he says, "You should call it Vantage Realty," because he noticed the Aston Martin Vantage out front. And I'm like, "Dude, I'm not naming my brokerage after my car. That's a dick move." He's like, "No, it's a good name. It's a good name." So I looked up the Webster's Dictionary of Vantage, and it was a commanding perspective. And I thought, wouldn't you want your broker or your agent to have one of those? And so I thought, okay, great. So I applied for Vantage Realty, couldn't get it because there was a landscaping company in a city, adjacent city to us, that already had Vantage Landscape. So I had to add the geographical descriptor of West. And we had 3 days to come up with a logo and launch this puppy. And we still got her done and had an awesome party to celebrate the grand opening.
wow.
It's
Would you
pretty cool.
say, AJ, that there's an element of enjoying the challenge for you? Like I feel like in fighting in business, I feel like people that feel that way or act or kind of have that mindset, they like the stress and the challenge. I think in fighting too, I think I've done martial arts and I know for me, I enjoy a challenge. And I feel like I have to overcome it. You feel like that's a part of it too. Is that ingrained in you?
Without a doubt. And I don't know if that's from the fighting or I fight because of that being ingrained in me, but absolutely putting yourself in hard situations, really testing your mettle to see what you're capable of. That's where the thrill is. That's where all the real like thrill of life exists, and that sort of overcoming of obstacles and running through adversity. That's the sweet part of this business and the sweet part of life, in my opinion. So yeah, I thrive on challenges. I thrive on adversity for sure.
What do you think drew you to boxing when you were a kid? I mean, for me, I got into martial arts and stuff when I was a kid simply because I got picked on pretty bad in school and something just triggered inside me to go, you've got to walk this path to grow and feel better. What do you
Yeah.
think was that for you?
Yeah. So firstly, I grew up in the era of like the Tyson fights, right? So in the 80s, early 90s, everybody. When there was a Mike Tyson fight on, everybody got together. My dad was a big boxing fan. And so, all through the 90s, watching Roy Jones Jr. and, all the big, big heavyweight bouts with Lennox Lewis, et cetera. That was always a way for my dad and I to bond. So we bonded over boxing. My favorite movie growing up was Rocky IV, where, the Ivan Drago, Rocky Balboa matchup. So I've always been drawn to boxing, but I also was put into karate as a young kid, I think at 6 or 7. I think that was because my folks wanted me to have some discipline and some structure. And karate was very good for that. Very, very good at, that respect of your sensei and the precision and the discipline required to do karate at a high level. After karate, I wanted to get into something a little more free flowing. So I got into Taekwondo. I wanted to spar a little bit more. So I did that, which then led me to kickboxing. So I ended up in kickboxing, and I had a coach that was particularly sadistic, and he had us doing these drills where we would kick, we would clash shins, or we would both kick a post until somebody wimped out. And so I would always have these bruised shins. And so when it came time to spar, I never wanted to be the one to wimp out during practice, but when it came time to spar, there was nothing left of my legs. So I would always try to convince my opponent to just box with me. Yeah. And it came a point where my coach just said to me, he goes, you can just take boxing, right? And so I was like, hey, I'm going to do that. So at 22, I switched and became a boxer.
Wow. That is great. That is great. Well, AJ, this has been a really good conversation. I really appreciate it. If people have questions about investing in real estate or selling the Canadian market, what's the best way for people to reach you?
Yeah, I'm really accessible. Best probably way to find me is to either send me a friend request on Facebook, or AJ Hazzi on Instagram. You can direct message me. And if you're interested in kind of doing a little bit of a strategy session on your portfolio, like maybe get you unstuck, I do offer those. And so if you message me, and we'll chat a little bit, and then if it makes sense, I'll shoot you a link where you can book a time in my calendar, and we can do a little bit of a deeper dive into your investment strategy. And I'd love to help. I do enjoy coaching at this stage. And so if I can be of service to you, please don't hesitate to reach out at AJ Hazzi on Instagram and AJ Hazzi on Facebook.
All right, AJ, thank you so much. It's been a great episode. I appreciate it. And I wish you all the luck, even though I don't think you need it.
I appreciate that, Ryan. Thanks, man. It's a good time.
Did you enjoy this episode? I hope so. If you want to support the podcast, you can go to buymeacoffee.com/Ryan Says Thanks. Your support is appreciated. And hey, even if you don't buy me a coffee, I'm happy to have you listening. So keep it up, and thanks again.